the point of our show here today is, lasting financial security. It's kind of like NASA when we watch them send a rocket up in space. They have one goal in that mission, and that's to bring those people back if it's a manned spacecraft and to launch it safely. That's what we have to do as advisors to help the clients.
And welcome into your game plan for retirement with Northwestern Ohio's resource for a common sense approach to planning for your financial, investment, and retirement future. He is president and founder of McIntire Retirement Services. Chris McIntire here with us, and we are always glad to see you, Chris. How's everything your way?
Hey, everything's going real good here, Peter. How about you?
Doing good, doing good. And it's, again, always good to see you, Chris. We appreciate the time, the insight that you share with us here on the program. And for listeners and viewers across Northwestern Ohio who are looking for that sound, experienced, qualified kind of perspective and advice and guidance with our money, which we have so many questions about, and especially this time of year, things seem to get a little thin as we are doing the holiday spending, and we need to have that financial confidence to enjoy ourselves across these months and into the new years. We'll be talking about that as we get along with the program. But Chris, as we usually do on the show, wanted to start off with your financial tip of the week.
Sure. Yep. Quick tip of the week here, tax related, let's call it. So, a lot of people that we run into, and, Peter, you and I as well, individually, we trade our investments from time to time, looking for opportunities and whatnot. When we do that inside an IRA account, it doesn't create any taxation, okay? Because we did not take a distribution. That's where the taxation comes from. If we have money outside of an IRA account and we bought NVIDIA 3 years ago and sold it, 2 weeks ago, we have one heck of a capital gains tax that we have to pay. So, sometimes, the investment strategy outside of the IRA might be more around tax efficiency, whereas inside the IRA, we don't have to worry about tax efficiency only when we make our distribution. So just be conscious. And, sometimes it makes sense to sell a loser to offset a winner as well. We call that loss harvesting. And when the market takes a little dip, sometimes it makes sense to do some of that. That's my tip of the week.
Sometimes people are creating their own tax problems, Chris. The right move in the wrong location is still the wrong move. And so we need to be cognizant not only of the trades that we are making, but where we're making them is very important.
It sure is, and for most people listening to the show today, their capital gains tax rate is at 15%. And, so, you got to give 15% back to Uncle Sam. So make sure you're doing that in the most efficient manner possible. It's hard to avoid it if you're if you're doing some work outside of IRA accounts, but minimizing it and making it efficient would be the goal.
Yeah. Trading inside of the bubble of tax advantaged protection, deferral, or Roth does not create a taxable event, whereas trading inside of a non-qualified account, even good trades can have some implications that you certainly want and need to be aware of if you are doing that. So just the financial tip of the week here to start the program. And remember, ladies and gentlemen, these are the kind of tips that as you move through your financial life, you want to know about ahead of time. And that's why it's always good to have the resource of an experienced, qualified professional like Chris McIntire at McIntire Retirement Services. And we've gone through a full year of tips of the week and different things that people have been subjected to or fallen into a trap or just overlooked that had some negative implications on them financially. The things that we want to know or address or avoid if possible. And again, if you would like to have that kind of resource of an experienced professional guiding you and pointing these kind of things out, and most importantly, if you'd like to get a plan put together, your game plan for retirement, pick up the phone and give Chris McIntire a call. Helped so many proactive savers, investors across Northwestern Ohio, but so many more need that kind of help and assistance. So if you are one, or you want to review or double check, inspect, or update your plan, give a call, 419-332-0532, 419-332-0532, 419-332-0532. 3-2. And Chris, on today's program, the subject is defensive financial moves, protecting what you've built. And a lot of people have built a pretty sizable net worth through their hard work, through their sweat equity, through their diligence in investing, built up a good investment account, Chris. But there comes a time where maybe you don't want to take the same chances and roll the dice like you once did. And, a lot of people are kind of hesitant and worried about where the market is right now.
Yeah, yeah, without a doubt. And, we deal with so many people that are just going into retirement and we're taking that nest egg, rolling it over into an IRA and creating investments that spin off income. So, trying to build that foundation like we talked about on show, I think last week or week before. And so if you think of it this way, so let's say, I want to get more defensive and I need to pull off 4% of my portfolio. And let's use $1 million to make the math easy. Okay. So I've got to, I'm going to spin off 4% or $40,000 a year. Okay. And let's say we did that all with stocks, what we call growth stocks, like the Nvidias of the world, Amazon, so on and so forth. Okay. Now, as the price of those stocks goes up, and they've been a hot commodity here lately, so that's why we're using them in this example, then you have to sell some of those shares to create your income. Okay. Whereas if you decide, you say, look, let's invest in dividend paying stocks, utility companies, those are pretty popular, energy companies, good dividend payers. And you say, well, regardless of what the price of the stock does, the dividend is still paying itself out. So I'm not having to sell anything. I'm just spending the profits that they're paying out to me. So, and I bring that up because it's a conversation we've had throughout the year. Growth stocks have drastically outperformed dividend paying stocks this year. Okay.
Yeah.
But at some point that role reverses. And now all of a sudden, if you were selling your growth stocks to create the income, when the market corrects, all of a sudden you say, well, heck, I got less money than what we started with, and at the share price because you've had to sell so much of that off. Where on your dividend stocks, you still have the same amount of shares, you're just spending the dividends.
Yeah. Chris, I've seen this here recently where investors had individual stocks, some of those magnificent seven, and then they had growth funds in the account as well. And I'm like, there's a lot of duplication here. You've got the individual stocks, and this fund owns a large portion of these magnificent seven as well. That's a high amount of exposure to those. And you're right, Chris, like everything in the market is cyclical. What is in favor this year might not be the flavor of the year next year like it has been. And in fact, I just saw a stat on if you look at the S&P 500, it paints one story. But if you take out those magnificent seven stocks or the high tech stocks and just look at the S&P 493, the rest of the S&P 500, that it paints a really different story of what the economy has looked like this year.
Yeah, absolutely. Manufacturing has contracted for, I think it's 9 months in a row. I just read recently in the Wall Street Journal. And, so there are some, like you say, the S&P 493 is different than the S&P 500 by all means. And, your average investor looks at the market or CNBC or whatever their business channel is, and they think a rising tide doesn't necessarily lift all boats when it comes to stocks. I mean, many different types: growth stocks, small cap stocks, mid-sized companies, value, dividend. And sometimes that market ebbs and flows over what's going to be the best performing segment of that economy. But the nice thing about those large, big, boring dividend payers is, they'll get their time in the sunshine as well. And, you still get to reap those dividends. So you do get work for your money. And I like that a lot.
Yeah. Well, Chris, if we are an investor that wants to protect what we've built, we've got to first start with a plan, like define what we even mean by protection and sort of set a goal for what we want to accomplish, right?
Yes, without a doubt. And, we use the term smart and SMART goals, so specific, measurable, achievable, relevant, and time bound. So we all have our goals. And for example, Peter's goal might be, hey, he wants to be done working at 62 years old. Okay. So for Peter, that's about 20 years down the road for those of you that aren't looking at our
Not quite,
podcast
not
here.
quite. I got more gray hair than that, Chris.
Uh,
Just by
and
a few, though.
Yep. And so Peter says, hey, I'm going to retire at 62, take my Social Security early to guarantee I get the least amount possible. Okay. And then hopefully everything else will work out where, if you have somebody with more of a technical background, engineers, for example, very smart, deliberate, logical kind of conclusions and decision-making processes out there. So, they can cut through the emotion side of things a lot more than, the average person that doesn't have that type of background. And I think that's where we help people as well reach those SMART goals.
Yeah, absolutely. And establishing what the main mission objective is here. If we are talking about, preparing to launch into a new year or a new phase of our financial life, retirement after a long working career, we've done a lot of the work, we've done a lot of the planning, but hitting the takeoff launch button is like the easiest part here. So we do need to define what we want to accomplish. And when we talk about protecting what we've built, Chris, we could look at that from a couple different perspectives. Number one, do we want to protect the lump sum and the asset? Or number two, do we want to protect the income that we have had up to that point? There's a couple different types of protections that we could look at. Do we want to protect against market volatility? Do we want to protect against taxes? Like we have to define our goals along the way.
Yeah, absolutely. And one of those primary goals, like you said, is look, I want to protect, kind of my principal investment. I want to be able to pass it on to my children. Very common. Probably a lot of folks listening to the show would agree with that. And then creating the income out of that investment piece so that we don't have to sell it off to create that income as time goes on. So, and again, some of that depends on how much money we have at play. What can we, what do we have to work with? How much income do we have to create out of it? Sometimes it's easier. Sometimes there's some real challenges. And, we have to caution folks about retiring too soon to say, look, if you hung in there a couple more years and really focused on some savings here and debt reduction, it would make your retirement a heck of a lot more satisfactory to you and remove some emotion of, look, do we have enough to get to the end?
Yeah. Well, Chris, it's funny because I think that the main goal for everyone is that sense of lasting financial security and stability and independence. But we've been taught to base that security that we're hoping for on something that is anything but secure. I mean, they're called securities in the market, but they are not secure. They go up and down, they're volatile. And just because we've enjoyed a pretty nice run here over the last several years, I mean, I think everybody listening to this program can remember serious times where the market was not so stable and did not feel so secure.
Yeah, without a doubt, the most recent examples would be the 2008 financial crisis. And then we go back to the original tech bubble in the late 1990s,
Whichever,
2000 to,
Chris, I'm hearing a lot of people say this AI tech bubble is eerily reminiscent of that dot-com bubble back in the 90s.
yeah, and there's a lot of money being spent, so a lot of money being borrowed, that means, and there's a fair amount of debt around some of that. So, you do have to be careful. Healthy markets correct, but bubbles burst. And, so, getting some of those healthy corrections are just fine, people taking profits and whatnot. But like the point of our show here today is, lasting financial security. It's kind of like NASA when we watch them send a rocket up in space. They have one goal in that mission, and that's to bring those people back if it's a manned spacecraft and to launch it safely. That's what we have to do as advisors to help the clients. Look, here's how we're going to get you through to the end, and there's always going to be some volatility out there. Not everybody can make a successful retirement by putting money in a 4% CD and thinking that's going to keep up with inflation over the next 25, 30 years. So, we have to use an array of different instruments, tools that we would call it. We have a nice toolbox. When we work with our friends at Brookstone Capital Management, the insurance companies that we represent to help put these solid pieces in place for our clients and give them some peace of mind.
Yeah, and several subsequent and smaller goals are always going to be part of achieving that larger goal, right, Chris? Is that, yeah, we've got this goal for lasting financial security. Well, that means that we're going to need some money, we're going to need some income, we're going to need to address inflation and healthcare and taxes and all of the cracks that can form in the foundation over time. And that's part of having a plan for making that transition, preparing to launch, but continuing to update that plan along the way. We don't want to drift too far off course as we move along.
Yes, yeah, without question, Peter. Good point there. And a personal example. My mom's 88 years old in a nursing home right now. Probably not going to come back home. She's doing okay there. And I have my dad is 92 years old, and so we're helping them update some estate planning documents, new powers of attorney, things that were 20 years old that, look, let's just revisit these. Let's make them a little more user friendly right now because, my dad still has all his wherewithals with him and all that. But, he wants my wife and I to kind of take over paying the bills and all that just to ease the burden on him and, make sure somebody's not hacking and, some of the efficiencies that we can do with modern technology, like paying his bills online and whatnot. Dad's old school. So, he's driving up to the bank to ask questions about once a day. And it's like, we can do all that on an app now, Pop.
Yeah, yep. A generational thing, but I think, like the activity and the interaction they get heading up to the bank as well. Sometimes, Chris, just a chance to have a conversation. Um,
Yep, and Dad's a real good texter, man. He can throw the emojis in there and all that
okay,
too
all
at
right.
92. So he's hip.
He's on the cell phone. He's got technology. Well, having a conversation is where it starts, ladies and gentlemen. Though, if you would like to get your plan together, make sure that you've defined the critical mission and all of the subsequent goals that will make that happen along the way. That is what formulating your game plan for retirement with Chris McIntire is all about. And I think this is vitally important that you have a plan. Chris agrees with me wholeheartedly. That's why he makes this offer and opportunity available to you each week here on the program. For the time available in his calendar, he extends the offer to you, the listener or viewer, to help you formulate your written plan for your financial future, the game plan for retirement. And it's no cost, no obligation. It's a courtesy service to have that conversation, to get that process started, and to get that plan put together. So if you would like to take advantage of that opportunity, pick up the phone here now and give Chris McIntire and McIntire Retirement Services a call. 419-332-0532. 419-332-0532. Chris, how important is it, in your opinion, in the goal of protecting what we've built, to strive to pay down debt and be debt free and build up that emergency account? It seems
Yeah,
like a small thing for most investors who have, those big retirement balances, but it does make a difference. Would you agree?
yeah, it really does. And we help, coach some people along those lines. And they're like, should we take an IRA withdrawal out right now and pay down this credit card debt? And typically that's at a higher interest rate than what the account might be earning. So, we help them manage some of those decisions as well. And becoming more tax efficient as well would be a complement to, paying down that debt, establishing that emergency fund, and trying to break it down into smaller achievable goals, right? I mean, what's the cliche? By a mile it's a trial, but by an inch it's a cinch. And how do you eat an elephant, right? One bite at a time. So, hey, we get overwhelmed when we look at sometimes some big picture stuff that we're looking at. It's like, look, all right, well, let's break this down. Let's take this step, this step, this step. And for those of you that have, aging parents or, children that need some financial help, I mean, some of those things can seem insurmountable. And, you got to know when to call in some professionals to get some assistance as well.
Yeah, yeah. For that main goal again of lasting financial security and stability, you've got to address some of the smaller steps, managing risk, understanding it, making it quantifiable, being tax efficient, reducing the taxes and risk where possible, addressing some of the things that can come up. In fact, Chris, that's why you are a fan of checklists. Just like before launch, NASA goes through many different checklists. You in formulating that game plan for retirement and helping to assure somebody that they are ready to launch into retirement, you go through some checklists of your own.
Yeah, we certainly do. And, from a personal side, I'm kind of a geek or a dork, if you will, when it comes to checklists. And, we're getting ready to head out on a little vacation here and take a little break between the holidays. And, I got three different checklists going, one for the people that will be staying at the house, taking care of the dog, how everything operates, who to contact in an emergency, all the things that we need to take with us. And then obviously all of the business items for Heidi and Ross to take care of. So we have when we help people transition accounts, we give them a checklist. Look, this is what's going to happen during this process. So, it's just kind of nice. It's nice having a map. We all use Google Maps and whatnot nowadays, just to, even if we know where we're going, but it would highlight us in case there's an accident.
Yeah.
We're heading to the airport. We'll be looking at I-75, on our way to Detroit to catch our flight, just to make sure everything's okay. Do we need to detour off and on Telegraph Road? And in the wintertime, that happens quite a bit. And I'm sure, those of you that fly out of Cleveland, with snow and all that, you're paying attention to roadways. So, yep, having that map helps you avoid some of the blocks, the accidents or whatever, however you want to cliche it on your own.
Yeah. Well, I am a big fan of the checklists as well, Chris. And just one recent example I can sort of think of that relates here is recently we had the Thanksgiving holiday, and I got sent to the grocery store to pick up some items to make that Thanksgiving dinner. And I told my wife, like, don't mind doing it, don't mind going. I'm happy to do it because I'm going to enjoy the meal later. I want to help where I can, but please, I only want to go once. So, can we make a list so that I make sure that I get everything that is needed to make that happen? And I guess even further of a comparison here, Chris, we only want to retire once, right? There's only one shot at an ideal retirement. So moving through these checklists and making sure we've addressed everything, updating the budget, reviewing the investments, the risk, confirming beneficiaries, checking and understanding the contribution limits and the risk tolerance that we have and the risk exposure that we have, and making sure that we are on track for required or scheduled distributions. All of those checklist items are going to build to the ultimate goal of that lasting financial security that I think we're all striving for, the goal that you help people work towards.
Yeah, yeah, without a doubt. And, a couple of examples on this checklist items would be, look, what's your monthly budget? Double check that. Review the investment strategies, obviously confirm your beneficiaries. Do you have some more room for 401k and IRA contributions or conversions into Roth IRAs? Review your insurance coverage, property and casualty. We don't do that. Heidi did that for in our office for 18 years. So, we always try to bring up and highlight people. Look, make sure you got an umbrella policy, and it's always good to review your homeowner's insurance. Did you buy something nice, or did you inherit some jewelry from the family or something like that you want to have listed on your insurance? And there are a lot of loopholes in there, so that's a big one for sure.
Yeah. Well, again, we are talking with Chris McIntire, and if you'd like to move through some of these checklists, and again, the formulating your game plan for retirement, the written plan that will help you know that you've addressed these items. That's the valuable offer and opportunity that Chris extends for listeners and viewers of this show. If you would like to take advantage of that offer, pick up the phone, give McIntire Retirement Services a call, 419-332-0532, 419-332-0532. You can also visit McIntyreRetirementServices.com, of course, available all the time online. Great resources there, but the real value is in the planning, the personal plans that Chris puts together for his clients and his families to help you identify your goals, specifically, measurably, realistically, attainably, time bound, and make sure that you have a plan that is going to work to help you achieve those goals and checklists of what is needed to achieve those along the way. That's the game plan for retirement. Give a call, 419 332 0532. 419 332 0532. Because, Chris, if we don't have a plan, I think that people in retirement quickly find out that saving is harder than spending. Spending happens kind of easily when we are out in the world and have all of the free time on our hands. We sometimes tend to overspend a little bit, but saving makes the spending possible. That's actually the hard part. Spending is a little too easy, though.
Yeah, it certainly can be. And, if you ever watched like the space shuttle or the rockets, SpaceX that are launching right now, we tune in for the last 30 seconds, right? Because we just want to see the exciting part, the takeoff, three, two, one, and, watch those big flames if you've ever been to Florida to see those things happen, or television, obviously. But being there in person is like nothing else. We were, my buddy Dave Gaylor and I, we were down there and saw a space shuttle launch, and man, never felt more proud to be an American than watching that go up. But anyway, I really wasn't concerned with all of the days and months and years of preparation that led to that. And we wanted to see the excitement of the launch because it goes out of sight pretty quickly as well. So, there is a lot of effort that goes into, your saving, in that discipline. So, I'm going to bring up, changing habits is harder than maintaining them, and as somebody who likes to exercise, I still don't get enough exercise just because of my crazy schedule, and that's a perfect excuse, right? But if I don't keep up that discipline, I lose a lot of ground, and it's hard to get that ground back. And then next time you go to the gym, you wake up and you're so sore. So I get very frustrated. So, that discipline and all that, look, you're going to lose a couple of battles before you win the war for sure. So, try not to get too down on yourself here when you're working on these budget items. And sometimes this is shocking and very, awakens you. My wife and I are going through all of this stuff right now as we're, doing some things with our personal finances and all that we do at this time of year. And my wife's like, God, look at all these subscriptions that we have that we pay for. This is, you don't think of it much until you add them all up together. And it's, it's shocking, phone bills, what phones cost, cable television, and, where can you trim some of that fat? And in retirement, you need to do that.
Yeah. Well, Chris, I know that as many of us have taken risk over the course of our investing lifespan, many people remember what those downturns felt like and don't want to experience them, especially as we are nearing retirement, or even if we are already in our retirement routine. Looking at this market, a lot of people are worried right now, I think reasonably so, and have a desire to protect what they've built, what they've been able to establish, what they've worked so hard for. We've gotten to a point where we're sort of cruising and the market's going well, but now is the time to review and check things to make sure that the ride doesn't get bumpier for us personally, even if the market gets bumpy here into the near future. You are helping people review and assess that. You are helping people make wise and informed decisions. You are helping people fit all of that inside of a plan there at McIntire Retirement Services.
Yeah, absolutely. We're the buzzword, the political buzzword of the month of December here is affordability, and we're still paying the costs of the high inflation that was in during those COVID years when there so much money was out there, overstimulated the economy, supply chain issue, prices went up. Well, those prices haven't come down 30%. They're just growing a little bit slower. So, it's easy to sit here and blame one administration versus the other, but, it's not like these things stop and start all over again with the next administration. We're dealing with these things on an ongoing basis here. And, there are some good economic business decisions that have been put in place, with the one big beautiful bill and some of the tax items that are very helpful to our retirees out there was my point.
Yeah, well, ladies and gentlemen, your financial results, that big goal of lasting financial stability, that will be dependent on planning and the balance of growth and protection that you have in place. And especially as we are preparing for a new year ahead, or if you are preparing an even bigger transition, the transition into retirement, or already there and want to make sure that you've taken steps to protect what you've built, Chris McIntire is an excellent resource for you. Reach out to McIntire Retirement Services. He has helped so many proactive planners, savers, and investors feel more confident in achieving that big goal of lasting financial security and stability by having the game plan for retirement and continuing to review and update and execute on that plan on an ongoing basis right alongside his clients. And if you would like that kind of relationship, want to double check the advice and the guidance that you have been receiving or inspect your plan, give McIntire Retirement Services a call, 419-332-0532. That is 419-332-0532. 419-332-0532, or visit online McIntyreRetirementServices.com, McIntyreRetirementServices.com. Chris, we always appreciate your time. Thank you for another great edition of the program. Always a pleasure seeing you.
Hey, buddy, good to be with everybody out there. Be safe out there, and may God bless America. Thank you.
Tune into Chris McIntyre's full radio program and visit McIntyreRetirementServices.com for many additional valuable resources, including other great episodes of Game Plan for Retirement with Chris McIntire. Be sure to subscribe.
The content of this radio show is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. You are encouraged to seek investment, tax, or legal advice from an independent professional advisor. Any investments and/or investment strategies mentioned involve risk, including the possible loss of principal. Advisory services offered through Brookstone Capital Management, a registered investment advisor.
Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a quarterly fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.